I've got a simple two-step formula I've backtested thousands of times, and when I took it live, it proved to be profitable long-term. No endless analysis, no flicking through chart after chart, hunting for a setup, no hours of study that just end in frustration. Definitely no more prop firm account failures giving you a headache. Instead, I let two powerful indicators do the heavy lifting. Endless Summer and Wavehunter, both by AceTradingBots. And if you stick around until the end, you will know the strategy too. Hey guys, Krugs here from Ace Trading. Let's break down my strategy. I like to call this strategy Endless Wave because it uses those two indicators, Endless Summer and Wavehunter. You can see I already have them loaded on the chart right here. And what we're going to do is I'm going to show you exactly where I take my trades and how I am so successful in trading my cash accounts, but also my prop firms. You can see I have our chart trader loaded on the chart, which does help me, I guess, handle my trades. But the thing I'm looking for, okay, so let's have a look what we have here. I also have our drift bars loaded on the chart because that is a bit of a secret sauce. Okay, you don't necessarily need those kind of candles. You can do this strategy with other candles. However, for NQ, I have found that the 10 drift bars seem to be that sweet spot. And I have Endless Summer loaded onto the chart, and Endless Summer is these vertical lines. Okay, and these vertical lines are finding, I guess, key pivot points in the market where you'll find that the market will just shift and it will just turn around. It doesn't always happen, and that's why we need to have some confirmation, so a bit of confluence from another indicator. That's why I'm using Wavehunter to help us find that trend. And then, so when you found that reversion, where you found that pivot point, the Wavehunter will then say, okay, let's get some confirmation and get into this trade. Okay, and you can see this was a trade that was taken yesterday by me. I saw the market coming down. It was coming down pretty quick. Okay, at 8 a.m. you can see there's a lot of the same timestamps here showing you how quick the market came down, and then it started to slow up. And then there was a pivot point from Endless Summer, which is this vertical line, and then I wait. I'm very patient. I wait, and I wait for this little blue triangle here that says, okay, the market has now shifted and is now going to have an upwards trend. And so what I would do is I just get in, and with my market order, I just go bang, press that there, and I'll get into that market. And as you can see, I was able to get a fair bit out of that before it turned around. I tend to use a tight trail. Okay, I'm using 10 drift bars. Okay, so that's kind of like a 20 tick candle. So I'm kind of trailing by one candle, okay, or kind of a half a candle as we move up. So I like to move my trail stop behind the candle, not too close, because you can see sometimes there's a little pullback, but you see I actually got stopped out up here. Okay, so if we were to, I guess, use our ruler, you can see I kind of got in, whether I got in with a bit of slippage, but imagine if I got in here and I was able to come all the way up here and not get the full thing, because I would have got stopped out here. And you can see I was able to get a really good 8 points out of that. Okay, and that's pretty much my trade for the day, really. I don't only need one of those trades a day. I'm in Australia, so I tend to trade before the market open. So let's have a look back here at some of the other trades that I could have taken. Would I have taken these Endless Summer entry points? No, because I'm still waiting for that blue, that blue Wavehunter signal to come into play, and that's why we have that second confluence indicator. Because if I was just trading in the summer, I probably would get into there and I would have been stopped out again. But by waiting, it gives us that really good entry point. Yes, sometimes you miss out and get in a tiny bit later, but you can see some of these moves. Like look at this one. If you got in there, you could have got a really good. So imagine if you got in here, you could have come all the way back down here, probably got stopped out by here. You would have got 16 points out of that, which is a huge trade. Okay. There are no Endless Summer signals here, so they're not real trades that I would take. So I go back until I find some more. Again, we've got a bit of a pivot point here. Market is starting to slow up, and we're able to move through. And then you can see there is a nice blue marker there. Would I have taken that trade? I probably wouldn't have. I probably would have waited for a bit of, because there's a bit of consolidation there. I probably would have used my own understanding of the market and thought, okay, there's a bit of consolidation. Maybe I'll wait for a breakout of this kind of area here. So let's just draw perhaps a nice little rectangle around that. So you can kind of see there is a bit of consolidation there. So I probably would draw that across here and go, okay, once I get out of there, maybe a bit of a retest, I probably would have got in here and got a really nice push out that side. Okay, again, there's another nice trade there. So we're just going to keep checking some of these out. So I probably would have got in here, maybe about there, and probably would have got stopped out here. So there's a nice 5 points out of that. No trades there. Go down here. This one here. This is one of the reasons why I tend to have a trail behind the candle. So imagine if I got in, market comes in, I get in here, I come up, I probably would have got stopped out as a break even. Okay, if I'm lucky, my one tick. Okay, because it would have come up and stopped out, which is totally fine. Because look at this. Because if I would have got in here, often I wait a couple of candles before I get into my trade. So again, like this one over here, I waited the 2 candles. I waited 2, so maybe I would have got stopped out as a break even, and then I could have re-entered and then got all the way up to the top there. So I could have re-entered again on this candle here and got all the way up here, and you get a nice 19 points on that. This is where market started to dive. So we're talking about that in between time London session and the US Open session. So none of these are buy signals. None of those. Look at that. Would I have got that straight out of 1, 2, 3, 4, 5? I'm thinking it's still going to head down. So I waited, and then there's a consolidation, then a push, and then I probably would have get into that because usually market will consolidate. People would think it's going to go long, and then they dumps again and then goes long. So it's a matter of using your own understanding. But if you don't have that understanding of the market, you can see just by doing one of the 2 of these trades, you're able to get some really good, get some really good trades out of the market. Often if I see there is a blue, after a red or a pink in the summer, if I do see a blue wave hunter, I'll tend not to get into that trade. So I probably wouldn't have taken that trade because it's not really a great confirmation. Okay, so I'm kind of looking for a pink. So there's a couple of pinks. Again, there's a few there. So maybe a bit of consolidation around this. Maybe I take it, maybe I don't. But even if I took that trade, I probably would have still got stopped out at a break even, which is totally fine because I'm happy with break even. I still haven't had a loss yet. This one here, this is a really good trade. Straight up, straight down. These are the best ones. These are the best ones. Would have got out of that probably for a nice 7 points. Straight up, straight down are always going to be the best trades. Like, see how these ones here isn't a straight up, straight down because there's 2 signals, whereas this one, perfect up, perfect straight down, and you get your signal straight in. Okay. And look, there's 13 points out of that. I could go on for days. Literally, none of these are signals that I would take. But then here, that's a bit of consolidation. Maybe I take that or not. Straight up or kind of a straight down. Could have got in for a nice couple of points. You could even have, so there's no signal there. I wouldn't take that. It's too far gone. I like to take the signals that are usually directly after the end of summer. So it kind of goes bang, end of summer. You wait generally like 1 minute. And if it's not there, don't take it. So that's it for the strategy. A quick reminder before we wrap up. I'm not a financial advisor. Nothing you've seen in this video is financial advice. It's for educational and entertainment purposes only. Always do your own research and make sure any decisions fit your own trading plan and risk tolerance. Okay. It's a fantastic strategy and we post about this strategy all the time in our Discord. If you are interested, please visit our website for more information and I will catch you again soon.